The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Oh, good afternoon, everyone. Happy Valentine's Day from Southern California. My name is Ken Shreve. Welcome to another edition of Breakout Investing on TFNN. As always, thanks very much for tuning in. My show airs every Tuesday and Thursday from 3 to 4 p.m. Eastern. If you want to give me a call and talk about today's market, feel free to do so at 877-927-6648. If you can't listen to the show live, there are two options. You can always get the show as a podcast on iTunes, and the show is archived. Every time I do a show, it's archived on Channel 13 and Tiger TV right on the homepage of TFNN.com. If you want to look at charts right along with me as I go over them on the show, just tune in to Channel 1 on Tiger TV. That's where the show is carried live, again, Tuesday and Thursday from 3 to 4 p.m. Eastern. Don't forget you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. All right. Well, market tried to sell off here. Apparently there's more shenanigans going on over in Greece. There was a meeting canceled there. Apparently Athens has not delivered yet on several demands made by its lenders, so we'll see what happens there. The story's getting so tiresome, I got to tell you. Anyway, let's take a look at the market here. Take a look at the Nasdaq Composite. I'm going to just refresh this chart, and then we'll pull it back up in Tiger TV. We'll see that the Nasdaq Composite right now down about 13 points, call it 0.4% to 29.18. In this chart, you'll see I have three support levels that I flagged here: the 10-day moving average, the 20-day moving average, and the 50-day moving average for the Nasdaq. At this point, Nasdaq's going to have to pull back about 6.5–7% to get all the way down to its 50-day moving average. Obviously, the tech index has been running higher since December 19th. Right now, the near-term support level would be its 10-day moving average at 29.01. After that, the 20-day moving average at 28.50, thereabouts, would be the next support level. So another, modest selling in the Nasdaq. We do have some volume in the Nasdaq today. This is interesting. At last check, volume was on pace to be, about 25–30% higher than yesterday. On Monday, there were volume was pretty light on the Nasdaq at 1.55 billion shares. Right now, looking to be about 35–40% higher. So there's a good volume push on the Nasdaq today, but still a 0.4% decline. Nothing to worry about. And as I've been saying on the show recently, there has been so little in the way of institutional selling in the major averages that even if we do see a whoosh down, where the Nasdaq is down 1%, 1.5–2%, and volume picks up from the prior session, it's going to take a lot more than just one or two higher volume declines to get in the way of this uptrend. I've also been saying in recent weeks that I think the foundation underneath this market is as strong as it's been in a while. There's still some debate out there about if new institutional money is coming into this market, how much is really coming in here. I happen to think, just looking through my screens and really looking at the Nasdaq's action since mid-January, thereabouts, over the past 3 to 4 weeks or so, there's been enough money coming in from the sidelines that I think the foundation is pretty solid right now, and it is going to take a lot of selling to really derail this rally. So overall, I'm still optimistic. Been talking about the fact that the Nasdaq Composite is looking a bit parabolic here. It's been running higher with little in the way of consolidation. So even if we do get a pullback, I'm not expecting it to be severe, and I think it would be more just the pause that refreshes rather than the start of a meaningful downtrend. All right, let's take a look at a chart of the S&P 500. I have that stored here. The S&P 500 is right here. That index is down a little more than 7 points, 0.5% to 1341. S&P 500, as you can see, is sitting right at its 10-day moving average. So next level of support after that would be its 20-day. That's the red line right here, and then the 50-day moving average down at 1286, which is really right around its last swing point back in late October. So still no major technical damage done to this market. Let's look at the NASDAQ and the S&P 500, and let's take a look at the Dow, and we'll see the Dow is down 53.5 points, 0.4% to 12,786. So that's what's going on in the market. Again, volume on the Nasdaq right now tracking quite a bit higher than Monday's level, which was below average at 1.55 billion shares. Volume on the New York Stock Exchange yesterday below average at 680 million. It is tracking very close to that level, maybe just a tad higher. All right. Where do we start here? Let's take a look at some economic data. Retail sales in January earlier today, kind of mixed data, not the best of news, but not a deal breaker by any means. Retail sales in January were up 0.4%, a little bit below expectations. Economists were looking for an 0.8% gain. Excluding autos, that's where the good news was. The sales were up 0.7%, slightly above the estimate of 0.5%. So the headlines are saying the market is headed lower today due to disappointing retail sales, maybe a little bit, but nothing really alarming in that data. Coming up tomorrow is going to be interesting. We're going to see the Fed minutes from the January 25th Federal Open Market Committee meeting, so we'll see what the Fed has to say. Again, the Fed it has this new transparency initiative where it's trying to speak as clearly as possible to the market. So I think the Fed minutes, when they come out, they used to be a big market mover. It's hard to believe there's going to be anything surprising in the minutes tomorrow, but we'll see how the market reacts when they come out. Thursday we have weekly jobless claims. We're going to get a look at housing starts and building permits for January. The producer price index will also be out Thursday. That is the measures inflation at the wholesale level. We'll also get the latest reading from the Philly Fed, and then on Friday the consumer price index will be out. So retail sales data earlier today, not too bad. The thing about this market, and I'm very encouraged by what I'm seeing. There have been a lot of stocks that have been gapping up in price lately. Earnings inspired gap ups, and just so impressed with how a lot of these stocks are trading post gap up. So a name like Seagate Technology, STX. Let's take a look at Seagate. And this is really how a stock is supposed to act after it gaps up in price. See, it's stubborn about giving back its gains, moving sideways, light volume, just showing incredible resilience and price strength. So, it's very counterintuitive for investors to buy a stock when it gaps up in price. But the important thing to remember, and Seagate gapped up on this day. Let's see, what day was Seagate was the gap up when they reported earnings on February 1st, right here. And even though it was up sharply, a lot of investors didn't want to buy that stock because they think they're chasing it. But buying a gap up is not as dangerous as you might think, because buying demand is so strong. And you talk about a good foundation being built. That is often what happens when a stock gaps up in price. Buying demand is so strong. You tend to see this type of price action that Seagate is currently showing. Just stubborn about giving back its gains. And there have been a bunch of others too. Akamai Technologies, AKAM. Take a look at a daily chart of Akamai. Same type of thing. I mean, look at this gap up. What was it, 4 days ago? And then just look at this. Just tight as a button here, just moving sideways. And that's why when a stock gaps up in price, you don't want to just say, I missed the gap up, I'm not gonna follow it anymore. these are great watch list stocks. Seagate, STX, AKAM, Akamai Technologies. Because if they keep moving sideways, pretty soon you have, what's called either a 3 weeks tight pattern in shape, where stock on a weekly chart flashes a series of tight weekly closes, and then boom, it breaks out again in heavy volume. There's another entry point for you. Let's take a look at Ralph Lauren, another stock that reported better than expected earnings lately. You see on the day it gapped up, it closed at its session low, but stock is just holding gains nicely. So Ralph Lauren is another one. How about Teradata, TDC? These are all stocks that I plan on watching over the next couple of weeks, because they're just showing such positive price action in this strong market. And there's a common, I'm not going to call it a myth, but a lot of market technicians will say, well, a stock has to fill its gap before it really starts to head higher. And that's true some of the time, but in many other cases it's not true. So a stock does not have to fill its gap to really get going. A lot of technicians like to see it. They like to see that sellers get flushed out of the stock. They like to see that gap filled, and then that's what really paves the way for continued strength. But not all stocks are going to fill their gap. And out of Seagate, Akamai, Ralph Lauren, Teradata, and the last one I had here in my notes was CTCT. Constant Contact, another stock that you can see is trading a little bit lower today, but a big gap up here, just sideways movement. So 5 stocks there that are good watch list stocks right now. There are a lot of people in this market that are either underinvested or they're not even in the market, and now they're starting to hear from friends and colleagues and work associates saying, hey, have you seen Apple? It's gone from $430 up to $500 a share. You got to get in here, and you really have to be careful at this point, because the market has been running higher for a while. There are a lot of extended stocks out there. The 5 stocks that I went over, even though they're showing favorable price and volume trends, you got to let them base for a few weeks anyway. Give them time to consolidate gains. And then the other pitfall is that if you have money you want to put to work in this market, you want to be very careful not to chase stocks. And by chasing stocks, it means just buying a stock that has been running higher for a long period of time, well extended past a proper buy point. I saw Valspar, ticker VAL. Let's take a look at that. VAL. I believe they had earnings either yesterday or today, but stock is up almost 4% today to 45.69. This is just a classic example of an extended stock. Okay, this is Valspar, and Valspar's a paint company. And again, I think it was earnings that are what are fueling the price gains today. But they make coatings, paints, specialty polymers for automotive, industrial markets. You see their products and stores like Home Depot. But classic example of an extended stock here, a stock that you just don't want to buy up here because it's been running higher forever. A lot of stocks out there that look like Valspar, even a stock like Home Depot. High quality, institutional quality stock. Take a look at shares of Home Depot, stock that needs to base for a little while. So just be careful chasing performance in this market. All right, folks, thanks very much for tuning in. You're listening to Breakout Investing on TFNN. We'll be right back in 3 minutes.
TFNN is what people are saying. Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
take a hands-on approach to managing your investment strategy. And whether you're always looking for the next trading opportunity to magnify your perspective and maximize your return, Direction Shares connects sophisticated traders with a powerful array of rising markets and a wide range of assets falling market. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFN.com, author of Mastering Probabilities, a daily investment trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to Breakout Investing, everyone. Ken Shreve with you. Thanks very much for tuning in. Again, the phone number to use to get through is 877-927-6648. Before we went into the last break, I was just talking about the danger right now of chasing extended stocks out there. Really something that you want to avoid, because when you buy a stock too late, you buy a stock after it's been running for a while, it frankly is just an easy way to lose money. So if you've been sitting out the rally for a while, or if you're still looking to put money to work, you have to be very selective about the stocks that you buy. Again, since we've been running higher for some time. Let's take a look at a recent new issue that I've had some calls about and emails about recently. Michael Kors, it's K-O-R-S on the NASDAQ. Stock's having a huge day today, up almost, God, it's amazing, up 24%, $8.01 to 41.62. Michael Kors is obviously a popular luxury brand. They are in a lot of different kinds of stores. You can find their products, accessories at Saks. You can find it at Neiman Marcus, Macy's, but you can also find his merchandise in discount retailers like Marshall. So he's Michael Kors, very spread out in the retail sector, but very, very strong earnings. Company went public in mid-December at $20 a share. You already have a double in this thing. It's again trading around 41.62 right now. up close to 24%. Earnings were just far above what analysts were expecting, which is why you're seeing this huge move today. Earnings up 87% from a year ago to 28 cents a share. The consensus estimate was for 9 cents a share, so that's a beat by about 19 cents. Sales growth also impressive, up 68% from a year ago to $373.6 million. Now, talk about accelerating revenue growth, how when growth accelerates from the first quarter to the second quarter, third quarter, fourth quarter, that's what you have going on at Michael Kors. So there's a very real growth story going on here. But all that said, this is a stock that it's just very, very tough to buy up here. I mean, I talked about buying a stock when it gaps up in price, but this stock gapped up after it was already very extended after a breakout over $28 a share. So I'm not afraid to buy a gap up, but I would just rather wait for Michael Kors to consolidate. This is going to happen when the market does pull back, and it will at some point. Stocks are going to pull back along with the market, and these really high-quality leaders like Michael Kors are going to base and consolidate gains, and they'll eventually give you an opportunity to get back in. But this is a stock that is just very risky buying at its current price around $41.62. I'm not going to buy it up here. It has a lot of qualities I like to see in a stock. I'm going to let it base, let it move sideways, and just be patient for a new entry point. So great numbers from Michael Kors. Let's also take a look at Rackspace. Rackspace Hosting. This stock's having a big day today. Shares of Rackspace up about 13.7%, $6.73 to $55.96. Huge volume in the stock today. Rackspace is a provider of web hosting services. Earnings up 80% from a year ago to 18 cents a share. Sales up 32% to $283 million. Rackspace is a current holding in my Ultimate Growth Stocks model portfolio. I started this newsletter back in April with TFNN, and if you would like to get a trial to Ultimate Growth Stocks, you can go right on the homepage of TFNN.com, click on newsletters, and then investment newsletters, and you can get a trial. A trial is now 4 weeks. Try it free for 4 weeks and decide if you like it, but I've got about 11 stocks in my model portfolio right now, including Rackspace, so I was pleased to see strong numbers from this holding as well. All right, moving on, let's take a look at some other earnings reports today. We're getting quieter and quieter on the earnings front, but still some pretty interesting names reporting here. Let's take a look at LivePerson. This is a small cap stock. Market cap approaching $800 million, I think about $790 million, so it's a small company. They only did about $36.5 million in revenue in the quarter that they just reported. That was up 22% from a year ago. Earnings up 11% to 10 cents a share. This is a company that provides customer service software for customers that provide customer service to their customers. So LivePerson, LPSN, big day for this stock, up 19% to $14.99 a share. When we come back, we're going to take a look at a weekly chart, because you'd think a stock that's up 19% is too late to buy, but it is breaking out of a base today, and to me it still looks like it's in buying range. So when we come back, we'll take a look at a weekly chart of LivePerson. We'll do that after we come back from this break. You're listening to Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
TFNN has an exciting announcement. As part of our Go Long America contest, Tom O'Brien and Steve Rhodes will be hosting 4 live in-person workshops that are absolutely free to attend. Denver on February 21st, Spokane on February 22nd, San Francisco on February 23rd, all from 6:30 till 9:30 in the evening, followed up by Boston on Saturday morning, March 3rd. Steve Rhodes will show you how to understand the power of 1% and how to master probability, along with avoiding getting stopped out of trades early, while Tom O'Brien will speak about the intense trading power of Tiger Gartley and butterfly patterns. All of these workshops are completely free to attend. Come see Tom O'Brien and Steve Rhodes live at one of these free workshops as part of the Go Long America Tour. For more information and to reserve your seat today, visit the front page of TFNN.com and click on the Go Long America Tour banner.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Ken Shreve with you. Talking about Live Person here. Very nice earnings report from this small cap company. And before we went to break, talking about a stock that's up 19% to $15.01 a share. You see a gap up in price, good solid technical breakout, and very heavy volume. Let's move over and just take a look at a weekly chart for Live Person here. And let's see here. Live Person, there it is. All right, and we look at a weekly chart, and kind of gives you a different perspective, doesn't it? I mean, this is a stock that looks like it's despite a big move this week, it does look to me like it's in the early stages of a potential nice technical breakout here. So in the technical analysis rules that I espouse, this is not too late Okay, this is an example of buying a gap up in price where, it's counterintuitive buying a stock that's up that much, but this is a good base breakout, and the stock could still be in the early stages of a move here. So that's a look at live person. Let's also take a look at Fossil. Saw earlier this morning, Fossil was trading down by $5-6 in the pre-market, but boy, nice turnaround here for the company. It's up 13% today to $118.32. Swing point over here in late October of $110.74. So nice breakout today in shares of Fossil. Earnings up 28% from a year ago to $1.87 a share. Sales up 18% to nearly $831 million. Thing I don't like about Fossil is that sales growth has been decelerating in recent quarters. In other words, the rate of growth has been slowing down from one quarter to the next. And typically, you want to see it the other way around. I mentioned Michael Kors, K-O-R-S, earlier in the show. You have accelerating growth at Michael Kors, decelerating growth at Fossil for 3 or 4 quarters now. So sales up 18% in the latest quarter. The quarter before that, sales were up 23%. Quarter before that, sales were up 35%, and so on. So rate of sales growth slowing. Fossil, not a name that interests me right now, but big day for the stock today on better than expected earnings. Let's take a look at shares of Yahoo. News around Yahoo today, not good. Apparently this all this talk about the company selling its Asian assets is not going to happen, and the stock is really paying the price. It is down 95 cents right now, close to 6% to $15.17. This is according to All Things Digital. Yahoo and its Asian partners, China's Alibaba, as well as Japan's SoftBank, have called off talks concerning a sale of Yahoo's Asian assets. So Yahoo longs don't like that news, and the stock is down pretty big, close to 6% to 15.17. All right. What else do we got here? We didn't go over crude oil today. Crude oil mostly unchanged, just down a little bit, down 0.2% to $100.74 a barrel. Some exploration and production firms that I follow here. Concho Resources up 1% today to 112.38. Pretty good technical picture here. And then Continental Resources, another name in the Ultimate Growth Stocks model portfolio that has been a solid performer. That stock's having a good day today, up 3.4% to 81.26. All right. Right now, I'm going to go to my friend Joe from my old stomping grounds in Boston. He wants to talk about, a stock that I used to hold at one point in my model portfolio, sold it for a profit a while back. This is Cerner. Joe, how you doing today?
Good. How are you, Ken?
Pretty good.
Sometimes, Ken, I feel like we're on the same wavelength.
Looking at those same growth stocks, huh?
Yeah, I'll be thinking of something and then you'll mention it. It's weird. It's really
yeah.
But I didn't know if you thought this was buyable here or you'd wait to get above the 7180. It looks like, they came out with some decent numbers. I just didn't know, how high quality you think this name is.
Yeah, well, Cerner is, in terms of the healthcare software, it really has to be regarded as one of the institutional quality stocks. It's got a pristine balance sheet, good consistent growth in recent quarters, good return on equity. I like the stock a lot fundamentally. And earlier in the show, Joe, I was mentioning all these stocks that have gapped up in price recently, right. And I went over 5 names, right. And Cerner easily could have been on that list as well, because you had as you mentioned, a gap up in price 4 or 5 days ago on earnings, and it's just kind of moving sideways. So at this point, I think you could probably nibble at it if it does get over that 72 price level.
Right.
Typically the folks over at Investors Business Daily like to talk about this, this 3 weeks tight pattern,
right.
Which would be, even more constructive. I think if Cerner could do that. But, if you get volume coming into the stock, the market rally continues, you could probably nibble at it if you've got a good Russian trading volume and it tries to break out over that 72 level. But I like Cerner a lot, and I think its last earnings report and the market's response to it,
right.
Tells investors that this is probably a good stock to own in this type of market.
Right. Okay.
All right, Joe. Appreciate it as always. Right. Have a good one. Take care.
Bye.
Yeah, Cerner, I don't have anything bad to say about Cerner. Good, high-quality company, market cap of a big company, too, $11.9 billion. They do medical record financial management software for healthcare providers, but just good, steady grower and, good institutional support as well. So that's Joe from Boston asking about Cerner. All right, crude oil we mentioned closed at $100.74 a barrel. Let's take a look at gold. April gold settled at $1,717.70 an ounce, down $7.20 or 0.4%. Take a look at the GLD, the Spider Gold Trust, and we'll see right now that is trading lower by 60 cents. 0.4% to 166.91. So be interesting to see. I do see a swing point in gold here. You can't rule out a breakout over 171.23. That would be its high set on February 2nd. Okay, February 2nd, that's 171.23. It has been drifting lower. There have been a couple of higher volume declines here, but hey, we'll see. If gold finds a bid, if the dollar starts to weaken materially, can't rule out a breakout in the GLD. But I'm not sure that it. At this point, that's a reasonable expectation. So it could happen. I'm not going to hold my breath, though, on the GLD. Its relative strength line has been in a downtrend for quite some time. So much better action in the market right now than the GLD, in my opinion. All right. Let's see what else we got here. Shipping stocks on the move today. Let's take a look at GLNG. This is Golar LNG. LNG stands for liquid natural gas. This is a company involved in the transportation of liquid natural gas. Shares of Golar up 5% today to 46.52. Working on the right side of a base here, showing nice signs of accumulation too. So can't rule out a breakout for GLNG. That would be, let's see, the swing point there would be 47.82. So we'll see how that goes. But GLNG having a good day. And let's take a look at let's see, what is it? TGP, TK LNG Partners, TJP. So a lot of these liquid natural gas transportation companies doing well today. Here's a look at TK. That is up 7 cents to 37.30. This is another interesting technical setup here. 37.95 would be the swing point for TGP. So couple of movers here, and let's see. Take a look at Priceline. PCLN. Good strong breakout in Priceline yesterday. Shares of Priceline today outperforming again, up $5.36, 0.9% to 576.51. Trading in the bottom half of its trading range today, but the stock, this is just another. Growth stocks are doing exactly what they should be doing in this type of market environment. I've talked about the fact that the market foundation is pretty strong right now, and you're just getting just a steady supply of heavy volume breakouts from consolidation areas. Priceline was a little late to the game, but had a big day yesterday, trying to follow through today, and the swing point for Priceline was its recent high. Let me get that recent high for you here. I think it was around 562 561, 562 thereabouts, all the way. That was all the way back in April. So good breakout for Priceline as well. All right, let's take a look at shares of Mercado Libre. This is another stock on my radar because of its technical setup here. The stock is down 64 cents today to 94.84. No earnings date yet for Mercado Libre, but it should be around February 22nd, so it's coming up soon. What you have here is just a classic cup with handle pattern. Here's the handle area forming here. You've got a swing point of 98.75. I thought for sure this one would have moved already, but it hasn't. I'm expecting a really strong quarter when it does report later this month. Currently, the consensus estimate is for profit of 42 cents a share. Profit of 51 cents a share. That's up 42% from a year ago. Sales should be up 41% to 87.7 million. Mercado Libre operates an online marketplace. It's sort of like regarded as the eBay of Latin America. They also have an electronic payment platform. So expecting good numbers from Melee in a good technical setup. I would not be a buyer here unless it breaks out with conviction in heavy volume over 98.75. So to look at Mercado Libre, and let's also take a look at SHOO, Stephen Madden. Daily chart of Stephen Madden, and the stock is up nicely today, up $2.68, 6.7% to 42.82. I want to go ahead and take a look at a weekly chart of Stephen Madden. Here it is. Weekly chart of Stephen Madden and Tiger TV, and another stock here you can see is still arguably in the early stages of a move here. So this is why I use daily charts and weekly charts. You look on a daily chart, it might seem like an extravagant mood. It might seem like it's too late to buy a stock. You go over to the weekly chart, which gives you a longer perspective. Sometimes it reveals a bigger base, and I think that's the case with Steve Madden. Early stages of a breakout here from a weekly chart. Earnings here due February 21st. That's a confirmed earnings date, February 21st for Stephen Madden. Another popular brand footwear maker. Earnings expected to rise 32% from a year ago to 54 cents a share. Sales up 65% to 266.2 million. I don't have any home builder exposure yet in the Ultimate Growth Stocks model portfolio, and I'm thinking about adding some. D.R. Horton is one of my favorite names in the group. That's ticker DHI on the New York Stock Exchange. Shares of D.R. Horton down 21 cents today, 1.5% to 14.52. Holding gains smartly, but again, this is what the daily chart shows. I want to take a look at a monthly chart for D.R. Horton, and let's do that. D.R. Horton, there it is, and again, it just shows a compelling setup here. Okay. Hasn't quite broken out yet. It did on a daily chart. You had a breakout several weeks ago, but this still could be in the early stages of a move. A lot of home builder charts look like this. Monthly charts have pretty bullish technical pictures. So DHI, D.R. Horton is a home builder. They specialize in for first-time home buyers and then what are called move-up buyers. So outstanding home builder here that is on the growth path again. So we'll see. If I do add a home builder, I'll look through the group, but D.R. Horton looks pretty compelling here. In terms of my Ultimate Growth Stocks model portfolio, I know I've talked about it before on the show, but I basically use a combination of fundamental and technical analysis to evaluate stocks. I tend to do most of my buying during market uptrends, and when I start to see signs of institutional selling in the major averages, I then start to scale back. I may take profits, I may take partial profits, and if the institutional selling becomes more pronounced, I slowly but surely start to move to cash. So I am a top-down investor, and I let sort of overall market action guide my buy and sell decisions. I tend to target strong price performers in an industry group, not the weak ones. I like to buy stocks that institutions are buying. Folks, don't forget about the Go Long America Tour. Right on the homepage of TFNN.com, you can sign up for a free workshop with Tom and Steve Rhodes. We'll be right back, folks.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. Yeah, right on the homepage of TFNN.com. Go Long America. Be sure to sign up for a free 3-hour seminar. It's coming to 4 cities: Denver, Spokane, San Francisco, and Boston. Free 3-hour workshop with TFNN's Tom O'Brien and Steve Rhodes. More information right on the homepage, and also a special offer for my Ultimate Growth Stocks newsletter where you can check that out. All right, a lot of earnings reports coming up this week, including some key ones after the close. Before we get to the earnings, let's check in on the markets here, because we're seeing another round of buying into the close here, which is compelling. Just what this market continues to do. Right now, the S&P 500, looking at the S&P 500 chart in Tiger TV, it is now down just a little over 2 points, 0.2% to 1340. So looks like another finish up near session highs. And let's check in on the Nasdaq and see what it is doing here. Nasdaq Composite is now down just 3 points. Not that long ago, it was down 0.6%, 0.7%. Now it's only down 0.1%, down 3 points to 29.28. So it looks like a close near the high for the Nasdaq Composite as well. This market is just flat out acting strong. All right, let's take a look at shares of Zynga. ZNGA on the Nasdaq. Remember when Facebook filed its papers to go public? Well, we know that Zynga accounts for about 12% of Facebook's $3.7 billion in sales in 2011. Zynga makes social online games like Farmville, Words for Friends. They've got a pretty good poker game too. And Zynga reports after the close today. Stock's having a good day ahead of the results, up 91 cents, almost 7% to $14.33. Zynga went public in mid-December at 10 cents a share. It is expected to report a profit of 3 cents a share on sales of just over $302 million. That's going to be up 54% from a year ago. So expectations are high that Zynga is going to report a good number. And remember, just last week, LinkedIn reported very strong results. The online professional network reported a profitable quarter, good top-line growth. It's been under pressure the past 2 days, but the stock gapped up huge on Friday. So shares of LinkedIn today under a little bit of pressure, down $3, a little over 3% to 85.05. Also after the close, let's take a look at Weight Watchers, WTW. You see Charles Barkley, he's lost a lot of weight on Weight Watchers. Earnings at Weight Watchers after the close expected to be up 34% from a year ago to 86 cents a share. Sales up 16% to $412.1 million. And Weight Watchers looks interesting here. The stock is up $1.50 right now, 1.9% to $79.34. Looks like this one could be in the early stages of a base breakout as well. Again, it's all predicated on what the company has to say. But Weight Watchers is a very well-run company, good track record of growth. So I would expect we'll see some pretty good numbers from WTW after the close. How about Peet's Coffee and Tea, PEET? Love their coffee. Let's see what the stock is doing ahead of its earnings report after the close. Peet's Coffee and Tea up 0.5% to 68.06. It's been another strong price performer in the market. Peet's Coffee and Tea expected to report profit of 43 cents a share on sales of just over 103 million. Coming up tomorrow, get earnings from CF Industries, Agilent Technologies. Thursday, Spirit Airlines, nice new issue there, ticker SAVE, and Baidu also reports on Thursday as well. Coming up next, the Tom O'Brien Show from 4 to 6 p.m. Eastern on TFNN. Have a great afternoon, everyone. Take care.